Welcome to Finantax Clips, your go-to guide for all things finance. Today, we're peeling back the curtain on a topic that's often glossed over in the rush of the investment world: the hidden risks of real estate investment. Now, real estate has long been considered a safe and reliable investment avenue. It's tangible, it's stable, and it's something we all need. But like any investment, it's not without its pitfalls. There are hidden dangers lurking beneath the surface that could turn your dream investment into a nightmare. And these aren't just hypotheticals. We're talking about real, tangible risks that every real estate investor should be aware of. Market fluctuations, property damage, legal and regulatory risks, tenant issues, and more. These are realities that can and do impact the profitability of real estate investments. Before you plunge into the world of real estate, it's crucial to understand the hidden risks involved. Let's dive right in with our first case study: market fluctuations. Now imagine this: you're a proud owner of a beautiful beachside property in sunny California. You've purchased it in the year 2021 during a robust real estate market with the intention of reaping a handsome profit down the line. Life is good. Fast forward to 2024, you're ready to sell, expecting a substantial return on your investment. But wait, the market isn't what it was. Suddenly, it's a buyer's market, and the value of your property isn't what you anticipated. This, my friends, is the reality of market fluctuations. Market fluctuations refer to the ups and downs in the real estate market, influenced by a multitude of factors such as economic conditions, interest rates, and even political climate. These fluctuations can significantly impact the value of your property. And as seen in our example, not always in a favorable way. Take our beachside property owner, for instance. They bought at the peak of the market when property values were high. However, due to unforeseen market changes, they're now selling in a market downturn. The property that was once worth a small fortune is now valued at much less, leading to a significant financial loss. This unfortunate scenario isn't a rarity. In fact, it's a risk every real estate investor takes when entering the market. No one can predict with absolute certainty how the market will behave in the future. That's why it's essential to understand that real estate investment isn't a get-rich-quick scheme. It requires patience, extensive research, and a solid understanding of the market. But don't let this discourage you. While market fluctuations can lead to potential losses, they can also present opportunities. A downturn in the market could mean lower property prices, offering a chance for investors to buy properties at a discounted rate. Then, when the market eventually rebounds, these properties could potentially increase in value, leading to substantial profits. As we've seen with our beachside property owner, timing is everything in real estate. Buying or selling at the wrong time can lead to significant financial losses. However, with careful planning and a keen understanding of the market, you can navigate these fluctuations and come out on top. To wrap up, while market fluctuations pose a significant risk, they also offer potential rewards. As a real estate investor, it's crucial to stay informed about market trends and adjust your strategies accordingly. Remember, real estate investment is a long game, and patience, diligence, and a sound understanding of the market are key to success. So, as you see, market fluctuations can seriously impact your real estate investments. Now, let's move on to our second case study: property damage. Imagine this. You've just invested a hefty sum into a charming Victorian-era home, envisioning it as the perfect rental property. The architectural details are stunning and the location is prime. It's a dream come true, right? Well, not necessarily. Let's take a closer look. One winter, an unexpected freeze hits and the old uninsulated pipes in the house burst, causing extensive water damage. The beautiful hardwood floors are ruined and the walls are waterlogged. The cost of repairs skyrockets as mold sets in and the structural integrity of the house is compromised. Or consider another scenario: a sudden hailstorm wreaks havoc on the roof. You're now facing the expense of a complete roof replacement. And let's not forget about the potential for damage from fires, floods, or even pest infestations. The reality is, property damage can come from a multitude of sources. It's not just about natural disasters, although they are a significant factor. Wear and tear, especially in older properties, can lead to expensive repairs and renovations. And here's where it gets tricky. As a property owner, you're responsible for maintaining a safe and habitable environment for your tenants. This means that you can't just ignore these issues or put them off until later. They need to be addressed promptly, and the costs can quickly add up. Now, you might be thinking, but what about insurance? Yes, insurance can cover some of these costs. However, insurance policies often have limitations and exclusions. They might not cover all types of damage or certain kinds of repairs. Plus, even if your insurance does cover the damage, you'll likely have to pay a deductible, which can still be a substantial amount. All of this can have a significant impact on your return on investment. Your anticipated rental income can quickly be eroded by unexpected repair and renovation costs. And if the property is uninhabitable for a period of time during repairs, you're also losing out on potential rental income. So, what's the solution? Well, it's important to get a thorough property inspection before purchasing any property. Understand what you're getting into and anticipate potential issues. Budget for regular maintenance and unexpected repairs. And review your insurance policies carefully to understand what's covered and what's not. Remember, real estate investment isn't just about the buying and selling, it's about the in-between, the management of the property. And part of that management includes dealing with the unexpected, like property damage. Property damage, whether from natural disasters or simple wear and tear, can seriously dent your wallet. So, always be prepared, do your due diligence, and protect your investment. Our third case study involves legal and regulatory risks. Now, let's travel to the bustling city of New York in the early 2000s. A savvy real estate investor named James decided to invest in a charming old building with plans to convert it into a high-end boutique hotel. He was aware of the building's historical significance, but he was not prepared for the legal and regulatory quagmire that awaited him. Zoning laws are the first line of defense for any city or town. They determine what can be built where and can be a real thorn in the side of any real estate investor. In James's case, he soon discovered that the building was in a zone that prohibited commercial properties. His dream of a boutique hotel quickly evaporated, leaving him with a costly residential building and no clear path to profitability. Building regulations can also pose a significant risk. In James's case, the building's historical status meant that any renovations had to be approved by a preservation committee. This not only slowed down his renovation timeline, but also significantly increased his costs, as he was required to use specific materials and techniques to preserve the building's historical integrity. Tax laws are another critical area that real estate investors need to understand. While tax incentives can make a property more attractive, changes in tax law can also drastically affect an investment's profitability. In the mid-2000s, New York City increased property taxes for residential buildings in certain zones. James, already struggling with zoning and building regulations, was hit with an unexpected tax bill that further eroded his profits. As we can see from James's story, legal and regulatory changes can be a minefield for real estate investors. However, they are not insurmountable. With due diligence and a keen understanding of local laws and regulations, investors can mitigate these risks. Before investing, it's essential to research the zoning laws of the area thoroughly. Understand what types of properties are allowed and what restrictions may be in place. If you're planning to renovate, ensure you understand the building regulations, especially for older or historical properties. Tax laws are ever-changing, and staying on top of these changes is crucial. Be aware of potential tax increases and how they may affect your bottom line. Consider working with a tax advisor who specializes in real estate to help navigate these complexities. James's story is a cautionary tale, but it's not meant to discourage. Instead, it serves as a reminder that real estate investment, like any investment, comes with risks. Understanding these risks and knowing how to manage them is the key to success. As you can see, staying on top of legal and regulatory changes is crucial in real estate investment. Finally, let's discuss tenant issues. Now imagine this. You've invested in a well-located property, you've done your homework, and everything seems to be going smoothly. Then you find your first tenant. But instead of the passive income stream you anticipated, you've walked into a minefield of problems. This, my friends, is a reality for many property owners who deal with problematic tenants. Let's consider the case of a landlord named John. John had a tenant, let's call him Alex, who was consistently late on rent. Despite multiple warnings, Alex's behavior didn't change. This put a significant strain on John's finances, as he had to cover mortgage payments out of pocket while waiting for the overdue rent. But the issues didn't stop there. Alex was also neglectful of the property, causing damage that went beyond normal wear and tear. When John finally managed to evict Alex, he was left with costly repairs that weren't fully covered by the security deposit. Furthermore, the eviction process itself was time-consuming and expensive, adding to John's financial woes. John's story is not unique. Many landlords have faced similar situations with problematic tenants, leading to financial and legal issues. So what could John have done differently to avoid this predicament? Firstly, thorough tenant screening is crucial. It may seem tedious, but taking the time to verify a potential tenant's income, rental history, and creditworthiness can save landlords from future headaches. It's also a good idea to check references, not just from the previous landlord, but also from employers or personal contacts. Secondly, a solid lease agreement is a must. This legally binding document should clearly outline the tenant's responsibilities, penalties for late payments, and conditions for eviction. It should also specify who is responsible for property maintenance and repairs, as well as what constitutes excessive property damage. Moreover, it's important to remember that being a landlord isn't just about collecting rent. It's about maintaining a professional relationship with your tenants. Regular communication and prompt responses to their concerns can go a long way in preventing issues. And of course, landlords should always keep themselves informed about their rights and responsibilities, as well as the local laws and regulations related to rental properties. This knowledge can be invaluable in case of disputes or legal issues. Tenant issues, like those faced by John, can indeed be a daunting task for any property owner. But remember, with proper precautions and practices, they can be managed effectively. So don't let the fear of potential tenant issues deter you from the lucrative field of real estate investment. Dealing with tenant issues can be a daunting task, but with proper precautions, it can be managed. So we've covered market fluctuations, property damage, legal and regulatory risks, and tenant issues. Quite the journey, wouldn't you say? But it's a journey that's crucial to undertake before you decide to dip your toes in the waters of real estate investment. Let's take a moment to travel back through the path we've trodden today. We began with market fluctuations, where we highlighted the fact that the real estate market is as unpredictable as any other. Prices can skyrocket one day and plummet the next. There's no crystal ball to predict these changes, so preparation and a keen understanding of market trends is essential. Next, we delved into the world of property damage. Properties are tangible assets, and unfortunately they're susceptible to everything from natural disasters to simple wear and tear. The cost to repair and maintain a property can often be significant, and certainly not something to overlook when considering an investment. We then navigated the complex labyrinth of legal and regulatory risks. From zoning laws to building regulations, the legal landscape of real estate is vast and often complicated. Ignorance of these laws is not an excuse and can lead to hefty fines or even legal action. Finally, we explored the realm of tenant issues. From late payments to property damage, dealing with tenants can sometimes be a minefield. Effective tenant management and a thorough understanding of tenant rights and obligations is key to mitigating these risks. Understanding these risks doesn't mean you should shy away from real estate investment, quite the contrary. It's about equipping yourself with the knowledge to navigate these potential pitfalls, to make informed decisions that can lead to fruitful investments. Remember, knowledge is power, especially when it comes to real estate investment. With a better understanding of these risks, you can make more informed decisions. That's it from Finantax Clips today. If you found this video helpful, please like, share, and subscribe for more. Until next time, stay savvy.